Well, let's look into our crystal ball as far as the economy is concerned for 2023. Last year, seems so long ago now, started with a tone of cautious optimism, but markets swiftly succumbed to a new threat, rising inflation, which has had a big impact on you. And also, after a decade of what's called easy money, in other words, cheap credit, what can we look forward to? Joined now by Eedes, an investment professional at Foord Asset Management. Linda, good afternoon to you. It's been a tough start to 2023, I think, for most South Africans. Are you expecting another tough year for most people here and in other places?
Yes, good afternoon, Stephen. I think there are some significant headwinds that investors do need to be aware of. But one of the benefits of having had one of the worst years in financial market history last year is that the odds are on our side that there won't be as negative outcomes across the board. So while there are still risks, there are also plenty of opportunities as well.
There are lots of things that are happening. So the end of the zero COVID policy in China may be good for South Africa, may be good for investors generally, but it may also bake in inflation. It may also lead to higher inflation because there'll be more demand for certain commodities, so oil prices, for example. Is it even possible to predict what's going to happen this year?
Well, I think predictions are always a dangerous game. I think as investors, we always like to be forward-looking. We do like to think how things are going to play out. That is definitely an important part of our jobs. At the end of the day, we are investing for the future. But we also need to be mindful that things can happen which you don't expect. So I think the only free lunch in investing is diversification. And one needs to be mindful that there are lots of economic headwinds which we're still working through, both locally and, of course, abroad. There's still significant risks that we need to think about as investors as we put together our portfolios. But as long as we diversify and our investment portfolios are not predicated on one specific investment idea being right, then at the end of the day, time is on your side and we can ultimately do a good job for our investors.
So, I mean, as I say, one of the reasons for optimism is what's happening in China. There may be some optimism if, for example, I don't know if this is going to happen, but if, for example, there was some sort of peace initiative between Russia and Ukraine. But you also talk about the end of the era of easy money, cheap credit. And we've had a 10-year period of that. Why is that so important?
Well, you know, when you've had artificially low interest rates, and of course we must remember that after the global financial crisis, central banks kept interest rates incredibly low, almost close to zero. And what that did was it obviously encouraged a lot of risk-taking. It obviously saw investors looking at other parts of the market to get the returns that they needed. And it caused quite a lot of imbalances in the system. So we're now working through the unintended consequences of that era of very low money, the very low interest rates rather. And then, of course, we had the pandemic on top of that. So after that era of very, very low interest rates, we then had a global pandemic where governments had to step in and provide even further stimulus. So that came in the form of course, paychecks to consumers, not necessarily so much here in South Africa, but certainly globally. And of course, now with central banks having to reverse course so dramatically, with interest rates having to rise so sharply and fastly, in fact, faster, it's one of the sharpest rate hike cycle in history for the US market. That then has consequences as we unwind through those situations. So the risks that are still inherent in the system, we're still waiting to see what the lag impact of interest rates is going to be on various parts of the economy. And we're still waiting to see what the impact will be, for instance, on the US labor market. We're still not seeing too much of an impact there. China reopening their economy is actually a very positive thing, we believe. And in fact, one of the areas of the market that we're actually quite excited about are those companies in Asia which are actually priced still quite attractively, which have great prospects, positioned very much for that reorientation of China from an economy that was very much driven by infrastructure spending out of the property boom to one that is going to be more oriented towards increased consumer spending, and that's particularly out of the digital and green economy. So we do actually have a team based in Singapore that is taking advantage of those opportunities, which is filtering through into our local portfolios that do allow global opportunities, because we actually see one of the greatest opportunities in the market being those companies that will benefit from the reopening of China.
So, Linda, I mean, if we are now at the end of cheap money, if we expect higher interest rates, if we expect an era perhaps of higher inflation, we've seen maize prices in South Africa go up by over 33%, one-third, from December 2021 to December 2022. I mean, for a lot of people, this is going to be a very, very tough time. The sort of quite benign, quite easy environment some of us grew up in is changing.
Quite absolutely, you're quite right, and I think that is why, particularly with regards to South African exposure, one of the good things about the South African equity market is that a lot of our companies are quite global in nature, so they do get revenue streams from elsewhere around the world. But certainly those that are domestically focused do face significant headwinds, and our preference in the South African equity market is for those businesses that are actually able to pass on rising costs. So those that are more resilient, which are more defensive, which are less discretionary spend. Unfortunately, consumers are having to make some tough choices at the moment about what they're prepared to spend money on or are able to spend money on. So certainly locally, we prefer some of the businesses that are more global in nature, and where they are domestically oriented, where they are supplying the consumer with the need to haves rather than the nice to have.
Linda Eedes, thank you very much indeed, investment professional at Foord Asset Management.